take about a minute here. We'll be ready to go.
Cool. Let's do it.
Live. It's loading up. Okay, we are live, dude.
Amazing.
Okay.
Let me share my screen here.
Yes, sir.
You can see? Sean, we're good? You can see my screen?
Yes.
Awesome. All right, guys. So how's everyone doing today? Hope you guys are doing fantastic. Sean and I are doing this live today. We thought we'd go over the USO trade, why it's getting absolutely destroyed. So we've been short this thing for quite some time now. And we've posted it quite heavily across a couple boards. We had a trade on where we were short USO, long XLE, and now we're just short USO. So first off, a lot of you guys have long positions in USO, and this is just easily seen by looking at the trade volume here and having like some of my friends who've never traded before calling me up saying, hey, what's going on with oil? We should be buying some oil here. Okay, you can see, look at this trading volume yesterday, right? Absolute huge spike. And today we're probably gonna see as well some massive volume and people just wanting to get exposure to oil. So what they're doing is they're buying up USO. They're buying up these, and they're buying calls on USO. Now, USO is not oil. It's not spot price. Okay, it's the future. It's the 30-day oil future contract. Okay, now there is no 30-day oil future contract. So what they do is, let me just head over to the prospectus here. What they do is they buy a bit of the front month and a little bit of the back month. So you can see here that they own a lot of the June 20 futures contract, okay? And they own a lot of the July 20 futures contract, but a little bit less, right? Because they're trying to get the 30-day oil's future contract. So what's happening is these contracts are extremely high relative. So if we pop that up, the futures contract are extremely high relative to spot, right? Spot's all the way down here, okay? And you guys are buying these futures contracts. This is going to keep coming down closer and closer to spot price. Let me just zoom in here. Okay, this is going to keep rolling down into spot price all the way down here. So, when you're buying, it's so important to understand the product you're trading, right? USO is not oil. It's the oil's futures. Okay, and what happens, so this is called contango. And this is not just any contango, this is like extreme contango. So let's go and let me show you what happens when you buy an asset that's in extreme contango. Okay, so you guys know UVXY, right? So when we look here at UVXY, look at this. It got absolutely destroyed while VIX, the underlying it tracks, has been flat. Okay, so VIX is flat, yet UVXY got smoked. Right, and this is because of contango. And right now, oil is in extreme contango. So many traders are buying up USO, right? So when you buy USO, then the person who creates the contract has to go and buy crude futures. So if you have all this influx coming into USO, all of a sudden it's going to push the price of the futures up like crazy, right? And that's what we're seeing, right? Yesterday, oil was down to, negative a barrel, right? Let's call it negative 20. And the front month future was trading at 22, 23, right? So that's a huge spread. It's going to have to come down eventually in the next few days, right? In the next 20 days. And you're holding that position. You're getting absolutely destroyed. And that's why USO is getting absolutely massacred, right? Oil's up today versus down -40 yesterday. Yet USO got absolutely crushed. And people were saying, well, what the hell is happening? Right? And this is what happens when you're not understanding your product. Right? The biggest thing between a professional trader and a non-professional is that the non-professional has no clue what the hell they're trading. Sean, what are your thoughts there about that?
Jordan, I think you're on a good roll here. I think we should keep going in. I think we need to explain, like, we need to make it very clear why this is happening, right? Some of these terms, a lot of people think they're getting into oil to trade it, as a directional, exposure to oil, but the futures get a little more complicated, right? Like without an understanding of what the futures are, it's hard to understand the prospectus of what makes up USO, right? So we have this, this rolling action. But do you want to? Let's see if we have any questions here. Actually,
Like
no one's asking about it yet. Actually,
like this has been one of the easiest shorts in the past, 2 weeks.
Yeah, blatant.
Like blatant. Yeah, I'll go all over the message boards. Hey, USO is going to be up so much tomorrow. USO is just such a good long-term long. I see some guys buying, leaps on USO. It's not the case. This thing is going to get absolutely crushed over the next coming days.
Dude, what's your expected return on if you're able to structure a short around this position? What are you thinking? What's our position looking like?
This trade made 20% today.
Wow.
This trade has been crushing it the last week.
It's terrible how people are like what do you think's driving this issue with the retail? Why do you think people are making this mistake?
They just don't understand the product. They think, right, this is, if you go on what this fund is, it's a oil fund. So they think they're buying oil, right? It's naive. It's a naive way of thinking about trading. You really need to understand the product you are in.
Mm-hmm. And this is like, we can't just listen to what people on the boards are saying. They don't know what they're talking about half the time.
Yeah, there was one guy saying like, so it was funny. When USO was $6, people were saying like, I can't believe how cheap these calls are. These like leap calls, right? And I remember when we posted in our group, we were like, guys, sell as many calls as you can to these people right now. They were overpaying for volatility first off, and they had no clue about contango. So it was like easy money there. But like, this is what happens when you get a bunch of retail traders and a bunch of people who like aren't professionals coming into the market. It gives you these type of opportunities.
Mm-hmm. That's saying that he thinks USO is going to liquidate.
Yeah, I mean they could, but at the end of the day, this is not just USO that's happening to. This is happening to all the oil ETFs. All the oil ETFs are the front month futures, or most of them are. So if USO will liquidate, hop into the next one. And I don't think they're going to liquidate. What they're trying to do is move into the back months. So they're going to start selling off some of the fronts that they're holding and move into the back, right? Because the back, it's a little nicer. Like, this is crazy. This steepness is crazy here, right? USO is going to be down another $1 tomorrow if this doesn't change. So what they're going to try to do is move out into the further months, where the steepness is less.
So did you take a look at the chart on Thinkorswim to explain it?
Yeah, I did. Right here. I did.
So guys, if you have any question about what any of these, my buddy Dylan's asking, can we expand a little more on what contango is and its impact on this stock?
Yeah. Contango is the slope of this curve, of the futures curve. Okay, so this was the one that expired, right? This is basically spot price because it's expired. This is the front month future, the first month. Okay, the second month, third month, fourth month. So what we're seeing is basically in 6 months, the market thinks the price of oil is going to be $30, right? Which makes sense. Like, we think oil is probably going to go up in the next 6 months. 6 months, right? It's all-time lows. There's really only one way to go. So, but what's happening is right now, because there's so much demand for USO, it's pushing up the price of the front month futures way above where they should be. So what's happening is every single day, think about it like this. Here's the slope of the futures contract. Okay, and you own this. You own this part right here. Every day, here's spot price. It's getting closer and closer and closer and closer and closer. So even think about it like this. Here's oil right now. And here's what you own. Oil goes up here, you still go down. And that's what happened today. Oil went up, but you're up here, you still go down. Right? And this is what's happening to USO, is that USO is just going to keep on ticking down and ticking down and ticking down.
So if you're long, get out.
Get out. Run.
Get out. Even if you can't structure a short trade, it is a mistake to be long on this right now.
It's a mistake. The thing is, so if oil spikes, let's say to $20 a barrel, sure, you're going to make money because you're long at basically 14. Right? You're going to make money if oil spikes past this number. But that's not what you got into the trade for. You didn't get into the trade because you thought it's going to be a massive move up. Right? You were just thinking that oil is going to move up from here in the long run. What if it doesn't get that move? If you don't get that quick move, it's not even right. This is not a long-term play, USO. If you don't get a quick move, you're screwed.
Yeah. So maybe to build off of that, Niku is asking, when should he buy, or what should he buy?
Yeah. So that's a great question, right? You can't get direct exposure to oil. It's like let me pull up here. Let's go on. So here's VIX, right? Everyone knows that. Let me buy VIX. Let me buy VIX when it's down here, because it doesn't go any lower than that. But there's no free money in the markets. You can't get exposure to VIX like that, right? You can only buy the futures on VIX, and this is what happens. You get this roll down, right? So there's no free money. So you can't get direct exposure to oil. You can. You go out and buy the barrel. If you want to go buy the barrel, that's direct exposure to oil. What we actually are trading, we're actually short oil. We're short the futures. We have been short the futures. Okay, so if you want to be long oil, unfortunately, you're going to be paying through your teeth. That's the reality. Everyone wants to buy VIX at 15, at 13 or 12. Everyone wants to do it, right? Everyone wants to buy oil at $0 a barrel. You just can't. There's no free lunch, right? If everybody wants to do it, then the price for it, right? The price for the futures are going to expand, and that's what's happening. Okay, but the thing is, though, people think they're buying it for $0 a barrel, but in actual fact, they're not. Okay, Does that make sense?
Yeah, it's perfect. So just to wrap up, so if you're trying to take a long play on oil here, you're going to be paying an arm and a leg for it. Is basically the reality. You can't get around that.
You can't get around that because everyone. Think about it like this. I was just like to clarify that as well, Sean. It's like everyone wants long exposure to oil.
Drives up the demand.
Drives up the demand, right? But not spot price, the futures. Because who's coming into the market right now? Retail. Retail's coming into look at this volume. Almost 1 billion shares traded yesterday. Right? You think that's mutual funds? Mutual funds aren't trading USO. You think that's pension funds? Absolutely not. But these are a bunch of people. I got a call from a friend yesterday who's never traded, saying he wants to buy oil. That's who's coming in here, right? So they're pushing up the demand of the futures. They have no clue they're doing it, and so now there's an opportunity to short the shit out of that, right? And that's what we've been doing for the last 2 weeks, and we've been talking about it too. And we're still short. We're still holding a short position.
Absolutely insane.
Yeah.
Absolutely insane. Okay, so Ricardo's asking here, what about buying oil companies? Isn't that a bit correlated to the price of oil in the end?
Yeah. So in the beginning, we had a spread on where we were long XLE, short USO. That was our initial trade about 2 weeks ago.
That was a good trade
Okay.
at the time.
Yeah, it was a fantastic trade. Here's the issue. Okay, so let me just show you guys the spread here, what that looks like. Okay, so XLE you can see has been doing reasonably well, right? And USO is getting absolutely destroyed. What the problem is that some oil companies benefit from these low prices, right? They benefit from these low oil prices. So if we get a massive rally in oil, you might not get the same, you might not get the direct exposure you wanted to in XLE or in XOP or in the oil tankers. Yeah, I mean, exactly. Some of them are going to get hurt. Some of them are going to make money.
Yeah, like the refiners probably make more money because they get cheaper raw material.
Mm-hmm. Right. And then, so it's like, we have to be very careful here. There's no free lunch. At the end of the day, there's no free lunch is what we're saying. What you could do is you could, and this would take a lot of work, is to find companies that are directly correlated with the price of barrel, with the price of oil, right? But the problem there is you're getting exposure to single name equity, right? What might happen is oil goes up, this company defaults, right? So it's a little tricky. So no free lunch. We actually structured a calendar spread in the futures contracts. So we're doing a relative value play, and we did it with the options. So we did a diagonal on the options. It's a little bit more complicated to talk about in this chat, but there are ways around it. It's just maybe level 3 thinking. Sean, I see you questioning some stuff there. What's going on?
No, just looking at the chats, making sure that we're taking care of all the questions from everyone.
You have another question there?
No, not related to oil. We had a couple stocks that people wanted us to look at, but so we're gonna move on quickly here. What we usually do in the morning is we just break down trades for the day. So we have a terminal, an options terminal that we built, and we just break down trades for people, right? So if you have any trade ideas, anything you want us to look at, we'll look at it for you right now. Just share what company, and are you long, short? You trying to, are you short volatility, long volatility? What's the trade you're trying to play? We'll help you analyze it from a data perspective, and we'll do that. So we had a couple here. Let's take a look at them.
Just quickly, I just want to see what the S&P, what we got here for skew.
Okay, take a look.
1878. Yeah, wow. Getting pricey, guys. Getting pricey to buy those puts. Wow. Okay. Questions.
So first one we want to look at here is AMTD, earnings tomorrow, implied moves outpacing average moves. We just want to do a quick
analysis. Who's asking that one?
Darth.
Nice. Okay. Yeah, look at this, man. Perfect. Implied move extremely high. On average, buying options suck. Okay. Yeah. Implied move basically way higher than average.
Way higher.
Sell. Sell is all I can say. I'm going to be short. Yes, I'm going to be short this thing in size.
Sell an iron condor here for sure.
Yeah.
That's actually crazy. I would do a little bit of research to see why the hell it's such a that's 10 times the move.
Yeah. So look at this though. People are buying up the calls on this thing, man. People are really buying up the calls here. Wow.
That's crazy.
Wow.
What is going on?
Yeah. Let's see if it's retail doing this. AMTD, right?
Yeah.
Oh, it's TD Ameritrade?
Yeah. So it's
okay. Okay, so it's not retail.
But in the think about it, sentiment's up 63%.
It's up 63%, but still, dude, that's a lot of
that's a lot of
call buying. That's a lot of call buying. I'd place a directional fly here, Siddharth. Lean a little bit positive deltas. Okay, structure the body, a little bit positive deltas. That's what I would do with this thing. I think they're gonna blow out. I think they're gonna blow up. Have a good quarter.
So?
Yeah, that's a lot of call buying. Like I don't know. Like, okay, let's see. Let's see here. I don't have access to short volume. That used to be really helpful. I can go to Quando later and pull it out. But I don't know. Like I don't know if people are short this thing, then it could be call buying to hedge. But if it's not, man, that's a lot of call buying. What's next? Any other questions there?
Yeah. Yeah, we got a lot here, dude. Let's take a look at our buddy Steph wanted us to look at something. Let me scroll up here. CMG. It has earnings tonight.
Nice. Earnings tonight. We're going to be playing this thing for sure.
He's saying that he's bearish on it.
He's bearish. Okay. Hey, and the market agrees with you. The market agrees with you. Look at this. Look at the skew. Look at this.
That's actually insane.
People love the puts. People love the puts, or they're selling the calls. One of the two. People are loving puts.
Yeah. So that chart basically tells us like the more tilted up and to the right, the more sloped it is to the right, the more demand for puts than calls. If it was sloped the other way, there'd be more demand for calls than puts.
Yep.
But,
and if we look here, actually, so buying options has been basically break even. So yeah, which is interesting. Usually options are overpriced around earnings events, but in this case, it's pretty flat. What happened to IBM today, by the way? I'll continue with this in a second. I just want to know what happened with IBM. Okay, so basically, gotcha. Okay.
Flat.
Yeah, flat. You basically broke even. Broke even on the buying the option, which we said perfectly yesterday, fairly priced. So
yeah, on our live.
On our live, yeah. Okay, so CMG, basically buying or selling options. There's no real bias there. In terms of the implied move is basically just a little bit above the average. So again, this is going to be fairly priced. So you have to, as a trader, you have to go in and do your own research above the market. The market is basically saying, given all the data, we're going to price it fair. We're going to have a fair price. So you have to come in as a trader and say, okay, well, is the market accounting for this? Is the market accounting for that? Okay, and that's where you're going to find your little bit of edge there, and then you can place a trade. So if you're bearish, don't just be bearish, okay? Because there's a lot of smart people trading this thing, right? Don't just say, you know what? The market's wrong. I'm bearish because of X, Y, Z that anyone can find on Yahoo Finance. Got to do some damn good research. It's the only way you're going to make money in this game, right? Is if you're spending a lot of time to do research and fully understand why you're bearish. And it can't be like I said, right? It can't be because of something you found on Yahoo Finance. Right? That doesn't make money. What makes money is something where you're going deep into the analysis and understanding, what the market is not looking at. Right? Otherwise, you're just screwing yourself, man. Okay? Especially because these options are expensive. Right? If you're bearish, this is what I would say though. Okay, we're going to structure a trade right here. You don't want to be buying puts. You're bearish. You do not want to be buying puts here. You're going to be paying an arm and a leg. Okay? So what you want to do is you want to structure an out of the money butterfly. So you buy a put at the money, you sell 2 puts out of the money, and then you buy another put way further out of the money. Okay? That's called a butterfly. That's how you should structure this trade. It's going to be super cheap. You're going to be short deltas. So you're going to make money when the stock goes down. And you're going to be short volatility or short skew, right? Which is what this is called. Okay, that's if you're bearish, that's the trade. You want to put a cheap bet on. Okay? If you buy a put, you're screwing yourself, man.
Okay, so let me see what else we got here.
Yeah.
That was good advice, man. Good job. Someone's asking, would you buy an in the money put option for USO?
You can do that. You can definitely do that. It's pretty expensive. So the problem with USO, sure.
What are you saying, Jordan?
Yeah. No. I pulled up USO just to show them.
Okay.
So the problem with USO is that in the money puts are going to, or in the money, basically out of the money calls are going to be pretty expensive. To short the stock. You know, a lot of people say like, I want to use options to trade. If you have a directional bet, if you have a directional bias, strictly a directional bias, why are you trading an option? An option has volatility risk, time risk, right? It's not just delta risk. If you think a stock is going to go down or stock is going to go up, trade the stock. Trading the option adds way more risks that you won't understand. You'd be like, hey, the stock went down. Why am I losing money? Right? Trade the stock.
No, I think that's such an important thing. You know, one of the biggest issues that people, you know, one of the biggest differences between professional options traders, the average options trader, is that the professional understands the product thoroughly, all these different risks. They can manage these risks, they can isolate these risks, and that's how they use it to actually take views. But it's not easy to do that, right? That's not something that's often taught in the retail space. Hopefully, we can break down some of those walls by making these videos.
Yeah.
But yeah, and if you want leverage, use margin. You don't need to use options to get leverage. You can use margin.
And the thing is too with leverage, like people will trade options to get that access to leverage, and their strategy is negative expected value. So you're leveraging up, you know, a negative edge, right? People want leverage to hit the gold mine, but you're literally not going to get there with options. You have to be a damn good stock trader to be a good option trader if you want to trade directional.
Yeah.
If you can't make it in stocks, you're definitely not going to make it in options.
Yeah, let's do a few more though.
Yeah.
ERI.
Oh, I think this is like one of the first stocks I ever bought. It's like Eldorado Gold or something, or Eldorado. Like, let's see what this thing is. Hold on.
Oh, it's the first one you ever bought?
I think so. I think this is like a hotel, either a hotel or gold.
Wow.
Let's see. How many? Okay, whatever. Okay. ERI. So this is it right here. But I can't, for some reason. Yeah, okay, what's the name of this company again? Eldorado. No. Okay, I don't want to go through all the tickers. But we're gonna do it. Okay, ERI, Eldorado Resorts. That's what it is. Yeah, this is one of the first stocks I bought a long time ago. Okay. Is this an earnings trade? No, it's not an earnings trade. What's your what's your view here?
Short view.
You short the equity? He wants to. Lots of there's a lot of call buying, man. There's a lot of call buying here. You just see right here, relative call put ratio. So the market does not agree with you. Okay. Yeah, skew is pretty low. So the market does not think that. Now the market can be wrong, right? Remember, your money is made when your view of the market is different. So market thinks, you know, it's not that bearish, right? So if you come up with a good reason why, then go for it. We see the implied volatility is in line. It's just above our forecast. So options are relatively cheap, a little bit on the expensive side. You could probably get away with buying an out of the money butterfly. That looks like it would work. But again, like, you know, if you guys are bearish, trade the stock, right? Or buy in the money put. Because remember, you want to structure trades where it's like, if you're wrong, you only lose a little bit, but if you're right, you make a boatload. Right. So out of the money butterfly is usually my go-to for a directional trade. Same with Sean. But yeah, other factors go into it, not just price. Okay, what's up, buddy?
You want to look at one or two more?
Yeah, we'll do one more. It's 11:10. We started 5 minutes late today. Let's look at one more, and then we'll call it a day.
Okay. Let's look at mRNA. I don't know if we didn't take a look at that yet, did we?
No.
Okay. Is, one thing that we like to see,
wow.
the reason why we're picking this one to do is Hans gave us a great little breakdown of why he's looking at it. So Hans is looking to short volatility with potentially an iron condor. StockTwits is very positive, and IVOL is quite higher than RVOL.
Beautiful. So, dude, take this in. See, right away, you can see on the skew, everyone wants calls. And if so, let's go right. Like that's insane how much call buying there is. Okay, so if we go here on StockTwits, mRNA.
Yep.
Right, 82% of people are bullish right off the bat. You know that a lot of and message volume is up. How big is it? Wow, almost 3,000 people are posting right now about this thing. 22,000 watchers. Okay, this is a big stock amongst retail traders. Let's go back to the terminal. So we know these options, and okay, so this is something you're going to see all the time with retail traders. They don't know how to price options. So what happens is they just go and buy as many options as they can, and that drives up the price of either out of the money puts or out of the money calls. Okay, because they have no clue how to price these things. They just say, give me. I want some delta exposure, right? So you're going to see this all the time when it comes to retail traders. So yeah, and the other thing that they're going to do is that they're going to push implied volatility way above a forecast, way above realized volatility. So you want to be selling as much as you can to these guys. Who asked this again?
A guy named Hans. I think that
Hans. Is he in our group?
I think Hans is in our group. I think he's using a different alias on YouTube here.
Okay.
Hans, are you in our group, man? Try to figure it out.
Because, dude, Hans,
this is asking RVOL, man.
I guess he had to because he said basically the PA forecast and everything.
Exactly.
Dude, yeah, dude, this is a great trade. So the way I would structure this is I would take two things. So first, do you have a directional bias here, right? Like retail is not always wrong. They're usually wrong. They're not always wrong. So what I might do is I might buy an out of the money butterfly, right? To short skew, right? This is an insane skew. And I get a little bit of a directional bias if I think that, because retail can be irrational for quite a long time, right? Like look what happened to Zoom. So they might be able to carry the stock for quite a while. And you can get super cheap exposure to that by selling these out of the money calls to them and buying the at the money. Okay, so you can do something like that. These are rarely going to pay out. So I could do an out of the money butterfly here. If you have a neutral view, you could sell these shares and buy stock against it. So you could sell these options and buy stock against it. So you're neutral on direction. Okay, so those are two things you can do. Or if you're flat out bearish, the puts are cheap, man. The puts are cheap. Buy the puts. If you want to fade retail completely, buy the puts. So it really depends on your view of where you think the market's going to head. I haven't looked into this stock, but after this this live, I'm going to look into it. I think this is a great opportunity to make some money here. The retail is being totally irrational.
Very cool.
Is there earnings for this thing? Let me just quickly check here. No. Okay. Cool.
I think we're good. So guys, like I said before, we're going to do this every single morning, right? There's so much going on right now. And honestly, this market is insane. This is insane. Yeah. So every morning, bring your ideas here. We'll help you analyze them. And any big news that comes out, we're going to look at it.
Yeah. And don't forget to subscribe, guys. Yeah. Don't forget to subscribe. Give this video a thumbs up if you got some value out of it.
I appreciate it.
Exactly. It really helps us doing this to be able to do this for you guys every single day. We really want to grow this community here.
All right, so we're gonna wrap it up there.
Okay, guys.
We'll be back at it tomorrow.
Yep.
Take it easy, everyone.
See ya.
Let me end this here.